So GameStop has been insanely crazy the past few days. We have seen the stock go from a little over $10 to about $160 today. And just after hours, as the market closed, we saw it touch almost $250 in a very short period of time. That's literally insane, from knowing that this stock was not too long ago under 10, and even before that, it hit a low of $2.57. This is over 100 times in just 1 year. Right now, in this video, what I want to cover is GameStop's massive short squeeze. I want to cover what is shorting, what is a short squeeze, how does it happen, shares float, shares short float, naked shorts, and GameStop's 140% short float, and kind of put that into pieces. So first and foremost, what is shorting, right? So I'm pretty sure everyone here is familiar with the idea of making money when a stock goes up, but you can also make money when a stock goes down. So that's basically shorting. So if you short a stock at $10, right, and that stock goes to $9, you have now made a profit of $1, right? That is shorting. Now, when you short, you are basically borrowing shares. So for example, if I go and I short a stock at $10, I have to go and now borrow this share from a broker to be able to short it. And then when I return the share, I am then buying it. So in a typical transaction of buying a stock, you hit buy and then you hit sell. When you short, you hit sell and then you hit buy. So once again, the idea of shorting is you make money when a stock goes down and you have to borrow the shares. Now, this also leads into what we're going to talk about in this video, which is short squeezes, right? So if you're borrowing shares from someone, be it a broker, the broker can request these shares back. So if the share ends up going too high, the broker may say, hey, listen, Umar, I need my shares back. And for you to return those shares, you now have to buy. And if you now have to buy, that now increases buying pressure. And that's basically what happened here on GameStop's price action. Another thing that happened on GameStop's price action is there's a lot of naked shorts, which in a way is illegal, if you want to call it, which is at 140%. And I'll break that down too. But that's like the whole idea of shorting, right? Now, how did the short squeeze happen? And let's talk about shares float and shares short float. Let me break that down, and I'll give you guys a good example of breaking down the whole situation. So if you guys take a look right here, I'm on finviz.com. If you go on this website, you guys can put in a lot of stocks, and it'll show you guys a lot of information about those names. So looking here, we have this category right here, right? So the first one is shares outstanding. So basically, GameStop has 65 million shares outstanding. So they have about 65 million shares total. Now, the shares float is how many shares are available to trade. This is what's out there on the open market. So about 15 million shares you cannot trade. These are held by the company and so on. But about 50 million shares are out there in the public market available to trade. So that is the shares float. Now, besides the shares float, we have the short float. Now, the short float basically represents that out of these shares, right, how much of a short percentage do we have? Now, for GameStop, we have about 140%, which is insanely high. Like that's not even normal. The first question people have is, how do we even have over 100%? And I'll break that down in a bit, but that's insanely high. Like I remember when Tesla had about 30% or 40%, that was high, right? And if you go to Tesla, right, Tesla now is very low compared to what it used to be. Now it's 8% compared to the 30, 40% it used to have a few years ago. Another name with a high short float is AMC, which is about 36%. This is already high, right? And AMC after hours too, AMC is above a key level, which is 740. So this is setting up for a possible good short squeeze tomorrow as well, right? But just besides that, this is where you can find it, and looking at the short float does help, because a stock with a high short float, in my opinion, anything above 20%, you come to an extreme point. 30% plus is a super, super extreme point. Now, how does a short squeeze work, and what happened with GameStop? Let's break that down and let's understand it, right? So this goes back to the first few points I made about what is shorting, right? So like I said, when you short, you have to borrow a share. So typically when you buy a stock, right, at $10, you invest $10 and you buy that stock at, let's say, 10. The most money you can lose when you buy a stock is $10 because the lowest a stock can go to is $0. So if you buy a stock at 10 and it goes to 0 or it goes to 1 cent or 10 cents, that's the maximum loss you can have. Now, when you short a stock at 10, the maximum gain or the maximum profit you can make is $10 because remember, you only make money when the stock goes down. But when you short a stock, your maximum loss is infinite, right? Because a stock can go from 10 to 20 to 30 to 40. So if you invest $10 and the stock goes to 30, you can now lose $20 on the overall trade. If it goes to 300, you now lost $290 on the trade. Now, this is where, like I said, short squeeze kicks in. This is where the borrowing aspect kicks in. So typically, when you short a stock, a lot of brokers, like I said, are lending you the shares. They're allowing you to borrow the shares. They at times charge a fee to borrow those shares. Now, the borrowers, which are the brokers, they have a margin requirement. So typically, if a stock gets to a certain point, those brokers are going to want their shares back and protect their downside. So let's say you open up a new account with $100 and you say, you know what? GameStop is trading at $10. So what I want to do is I want to short 10 shares of GameStop at 100. So you short 10 shares of GameStop at 100. Now, typically, the broker understands that if this stock gets to 20 and anything above $20, the broker now has to come to you for money, right? Because think about it. You shorted 10 shares at 100. You shorted 10 shares at $10. Those same 10 shares go to $20. Now, you lost your full investment of $100 because the stock moved up 10 points. So now anything above 20, the broker will basically have to come after you for money. Now, the broker is not in the business of coming after you for money. So what they're going to do is they're going to forcefully sell your shares, especially if you get to this point. Or if you get to $15, the broker will say, hey, Umar, we need our shares back, or we need you to add more money, which now leads to a margin call. So typically, if the stock price does make it does make a strong move up, you are now required to either add more money to your account or cover your position. Now, for you to cover your position, you now have to buy, because remember, when you short, you start with a sell and then you go on to a buy. So at this point, you already did a sell. Now, when the stock goes up, the broker may say, hey, listen, Umar, we can't let this go beyond 20. We can't let this go beyond 18. We need our shares back, or we need you to add more money. So either you'll add more money to your account, right? So you can take a larger loss if this goes up because the broker wants to be covered, or you will have to rebuy or cover your position, which will lead to a buying pressure, which will also drive the stock up higher. And that's basically what has been happening with GameStop. So if you look at GameStop, right, there's a lot of hedge funds that lost billions and billions of dollars. A lot of people lost millions, and a lot of people also made millions and millions of dollars on this. So typically around this time, if you guys remember when we did make our first leg up from 19 to about 40, we started seeing a lot of short sellers step in here, right? And that's like I said, that's something that also kind of led us to our next move, right? So around this area, right, let me just kind of break this down. We see our first short squeeze, right? At 22, right, this stock made a strong move up above 22. When it started making a strong move up above 22, all these people that were shorting, they now are forced to cover. Some of them have additional capital to add. Some people are covering. That covering is now leading to an extensive stock buying for those companies, because now those hedge funds, institutions now have to buy the stock, which is increasing buying pressure and driving this up a lot higher. And then the upcoming days, we started seeing more short selling. These people that exited re-entered here. As they re-entered here, once the stock price broke above this level, we started seeing this squeeze even more. Now that squeeze started coming because of, obviously, as you guys saw in Wall Street Bets, there's over, I think, 1 or 2 million people just on that community, and they've been buying. So that buying is creating a lot of buying pressure. That buying pressure kicks in with supply and demand. There's not a lot of supply and there's a lot of demand. That demand is driving up the stock price. The short sellers are getting squeezed out. They have to rebuy their position. As they're rebuying their position, they're also driving the stock up because for them to get out once again, they need to rebuy their position. Now, how do we have a short float of 140%? Now, that's where we go on to our last point, which is naked short. So this is technically illegal. So like I said before, the idea of shorting is brokers have to lend the shares. So let's say I'm a broker, right? And as I'm a broker, I may have a client that owns 20 shares of GameStop. You may come to me and you may say, I want to short 10 shares of GameStop. I will lend you one of these client's shares to you to kind of short. Now, if it goes back up, I will need the shares back. But now, if let's say you come and you short 20, great, I have 20 in inventory. But now what's happening at certain firms is they only have maybe 20 shares to short or 20 shares from the clients and they can lend out 20. But they're saying, you know what, I'll lend out 50 shares even though I don't have the 50 shares. Now, the reason they're doing that is because, like I said, brokers charge a borrowing rate on this. So brokers are making money on lending out shares. So some brokers don't even have the shares, but they're lending it out, and that's causing the short flow to kind of go above 140%. And as this name has been driving up higher and higher and higher, more people are shorting. We see a squeeze. And then yesterday, once we saw the squeeze yesterday, more people stepped in at around 159. They're stepping in, they're shorting, and they're thinking, you know what, this is the end of the squeeze, which kind of makes sense because a lot of people's strategy is when they see a stock with no real valuation, and I'm not saying GameStop has or doesn't have valuation, I'm looking at it from their point of view. They might say, you know what, short, step in heavy, they step in, they drive it down, and they're like, okay, that's it. And then you push again. More people they keep shorting, and they're borrowing shares at a very expensive rate, and they're constantly getting squeezed out. So that's basically what's happening with GameStop. Now, can GameStop go up higher? Possibly. If tomorrow we open up above 200, we take out 250s, and we continuously see buying pressure, all these people that are shorting or were shorting are going to have to cover again or maybe add more money, and that's going to lead to a higher short squeeze. Now, please be careful trading these names because once they fall really fast and in a very short period of time. So please be careful if you take these type of trades at this level. Now, if you do want to look at other names that are setting up for good short squeezes, one, like I said, is AMC. AMC has about a 36% short float. AMC after hours today is at 842. It's broken a major wall that I have around 740. As you guys can see, that 740 that I got going on here is a major wall. We kind of just broke out of that major wall. So I think if we, show a little bit of strength tomorrow, especially around the 9-ish to 10-ish area, we might squeeze to a higher point, and this is looking very strong, alongside with a lot of other names that have a lot of high short float, Fubo being one of them. This is actually a position I'm in. I locked in 500 on this, but a lot of names are squeezing after hours. But if you guys are looking to trade GameStop tomorrow, just please be careful because it's extremely volatile. So that's that. That was the whole idea of this video, just to kind of break this down, because a lot of people have been messaging me and just asking me, can you break this down? And I think GameStop was a perfect example. With that being said, if you like this video, please give it a thumbs up. And I'm going to make another video soon talking about a few other plays that are setting up for good short squeezes. And I hope you guys had a great trading day.